Hey there, if you're new to the channel, you want to learn everything there is to know about living in the New Smyrna Beach and our surrounding areas, you've come to the right place. My name is Matt Ecoff. I'm a local real estate expert. I'm joined today by Faith Adams from HMA, and we're here to share everything from the best neighborhoods to the hottest spots around town. Listen, I get phone calls, emails, text messages, Zoom invites every day from people just like you wanting to move to the beach. So whether it be in 2 days, 20 days, or 200 days, please don't hesitate to reach out. We would love to help you move to the beach. Please make sure that you hit the like button and subscribe so you get all notifications and all the updates about New Smyrna Beach and surrounding areas like Ormond Beach, Port Orange, Ponce Inlet, Edgewater, and Daytona Beach. So today, again, I'm with Faith Adams at HMA Mortgage, and Faith has helped me with a lot of deals from people just like you that are moving from out of state. And so today we wanted to talk about what it's like moving from out of state and what are some of the things and obstacles that you guys go through or that you didn't know about. And we're just going to kind of speak freely. I do have some questions here, but I want to kind of just have an open, organic conversation. Faith, thank you so much for joining us today.
Thank you for
and
having
giving
me.
all of our viewers a chance to know some of the ins and outs about what to look forward to in New Smyrna Beach. I'm going to dive right into it. Again, I have a list of questions here. So can you help buyers understand the financing caveats in Florida and maybe New Smyrna Beach specifically?
Financing is, I have a variety of different products, so they can accommodate most anyone's circumstances. Financing, I like to say, is circumstantial. What is that person? What is that buyer's circumstances? What are their sources of income? Are they selling a home from wherever they're coming to get to here? And I have a variety of products that can accommodate all of them. So depending on what their circumstances are they coming into Florida, making it their primary home? Or perhaps it's someone from out of state that wants to buy an investment property, or maybe they want a second home, because there is a drastic difference between a second home and an investment purchase. So depending on circumstances, I have a variety of products that can accommodate all of them.
Faith, I've had some people that I've introduced you to that are looking for primary residence. My good friend Connie that we helped out do a close on. Then I have other people like Jim and Lonnie that are looking for a second home. So can you tell me the difference or some of the differences on financing versus a primary residence and a secondary home or investment home?
The difference is occupancy. Primary home, obviously the buyer's going to occupy that home permanently. That's their primary home. Secondary home, they might occupy it some. They will occupy it some, I should say. They may choose to rent it during the periods that they're not occupying it. Investment home, they're not going to occupy it at all. They are truly buying it to rent it. It's an investment. It's going to generate cash flow for them. So there are 3 different loan types for those 3 different occupancies.
Okay. Can you tell me what those loan types are?
They're called just that, primary home purchase, which is traditionally going to be conventional or FHA, might be a veteran, might be a USDA, depending on the location. Second home is going to be a conventional purchase because the government-backed loans do not accommodate second home purchases.
Gotcha, okay. That makes
And investment homes are going to be conventional purchases as well. And then I have some unique products such as a debt service credit ratio known as a DSCR. That's where if the property is already cash flowing, it can pay for itself essentially. It would pay for the mortgage on the property.
So maybe a house that somebody's going to be buying a property that's already currently being rented and they have future rental income already on the books in reservation, something like that would be in that scenario.
Yes, and that DSCR unique loan product is going to be for that person who already has some investment property, maybe has a 12-month history of investment ownership.
Okay.
That they would qualify for that. But there's many unique products that can accommodate.
Okay, great. Thank you. Okay, so next question. Can you tell me what's changed with interest rates and lending requirements over the last 12 to 18 months? Has there been some significant changes? It's
been fluctuating. It's been a really heavy ebb and flow. That conventional loan for that person who has that 740 to 750 credit score interest rate and they're putting 20% down on a home, they're probably looking in the 6.5 to 6 5/8 range of interest rates. There are some dips and there are some buy down opportunities that are available. Everyone is different, and that is the unique thing about the market we live in. Is in years past we could see trends, we could track things better, but our economy has been so up and down and up and down, it's been very difficult to find that median rate.
So can you tell me, and this is a personal question, but hopefully it would help the audience as well, with 30 years versus 20 versus 15, 10, do the interest rates change dramatically with the terms and the length of the term?
Not like they used to. That's one of the many changes that's been unusual to get used to. Is that used to be adjustable rate mortgages. Say someone knew they wanted to pay off their home within a 3 to 5 year period of time. Well, an adjustable rate mortgage might be ideal for them because during that first few years, they could do an interest only type loan and then pay it off, and the interest rate would be very small.
Mm-hmm.
That's historical. We don't live in that time period now. Nowadays, the interest rates on adjustable rate mortgages are equal to, if not higher, that traditional conventional loan.
I wonder if they figured it out, because I got a call in 2018 and I had a 30-year mortgage at that time, and I got a call from Quicken Loans, which was who was my lender at the time, and they called and they said, hey, do you know that if you drop from 30 years to 20 years, you will actually only pay, it was like $160 extra a month, but then I would save $20,000 or $30,000 over the time on interest. And I was like, why in the world would they call me to tell me to save money, which is going to be going to them in the first place? And we did refinance for 20 years. And then again in 2020, I think right before or right after COVID, I can't remember exactly the time, we refinanced again for 15 years. And it was only a slight difference. And every time we were appreciating in value as we were refinancing. It was a secure loan for the bank, but I just didn't know if these times seem to be really crazy. And listen, we're in July of 2025. So if you're watching this video in July of 2028, then maybe we're not in those same times. But right now, when we're out here today, it is July 22nd, 2025. So if you're watching this, yes, it is crazy difference. And I wanted to ask about that because I've had some people talk about that and discuss.
So that's a great point. And it's a topic of conversation I like having with my clients on a regular basis, actually. So shorter-termed mortgages are fantastic. Obviously, that person has a plan, a good financial plan where they intend to pay their home off in a shorter period of time. Not everybody can do that. Another thing to realize and understand is freedom. I love my freedom. We live in America. We love freedom. And a lot of folks don't realize that you actually have more financial freedom connected to a 30-year fixed mortgage. And here's why. You can voluntarily shave the term of that 30-year mortgage. If a person makes additional payments towards principal and interest during the year, if they do 2 full principal payments per year, they will automatically trim the term of that 30-year mortgage into a 15-year mortgage.
Wow.
And they've done so voluntarily.
So if the mortgage payment was $3,000 a month, over the next 12 months, they did $6,000 worth of principal only payments. They would reduce their term from 30 years down to 15.
That's right.
That is crazy.
Yeah, it's great.
Could they do that over the 12 months, that $6,000 divided by 12 months,
yes.
and do that just this little bit extra per monthly?
That's how I do my personal mortgage.
Oh my gosh.
I sure do. Because the beautiful thing and the freedom about it is if you have that extra money and you can apply it towards your principal, your equity's growing. You are voluntarily growing your equity. But let's face it, we live in uncertain economic times. People are nervous. People are really watching their money more so than ever now. Maybe you don't have that extra for a few months in a row. Well, guess what? You're not obligated to pay that extra. You have your own freedom. Yeah. I don't hate a 30-year mortgage. You have more freedom to shorten the term if you choose to.
So hopefully I don't put you on the spot here, but I'm going to give you another hypothetical, because now I'm thinking for myself too. So let's say somebody has a 15-year mortgage and the mortgage payment is pretty significant, but I have a really nice rate that I'm sitting on of 2.99% at the 15-year. Is it advantageous to switch to a 30-year and just make that additional payment there, but then knowing that I'm going to be in the interest rate that we're fluctuating right now?
You have a lot of elements to think about though. Let's run the numbers and find out what would that new payment be based on whatever that interest rate is that's applicable. And then you will have that freedom to make that larger payment if you choose to be able to keep your equity.
Just right now I don't have an option. And it sounds like on the larger one, I would, and it wouldn't seem like that much extra, especially if you're able to do it on a month-to-month basis.
Oh, the other thing I was thinking is tax analysis. Is it going to be more beneficial for you at the end of the year? You're going to get that 1098 form, and it's going to have a different rate applicable to that 1098 form. Mm-hmm. So it might be beneficial for you tax-wise. I'm always going to ask that you talk to your CPA to make sure of that. But for some people, it's worth it for them to do that.
So let's have an easy transition here since we're talking about taxes. Can you tell me where examples of homestead would come in and apply here? Does it have to be a permanent resident? Because I've heard a lot of different things. I've heard it's a percentage of the time that you spend here a year, or if this is your permanent resident. But we have a lot of snowbirds here, and we have a lot of this is vacation, call it vacation investment. So they're going to stay here for 3 to 6 months, and then they're going to go back up north during the summer, and they're going to stay there and rent it for the highest amount. So can you tell me how that homestead works in maybe a couple different scenarios?
I can tell you what I know. I do not work for the property appraiser's office,
Okay.
So I have to defer to them for
Understood.
the ultimate say-so. And they have a fantastic website, and that when you go to the website that they have in the upper right corner, there's several different tools and tax estimators that are fantastic. But in Volusia County, homestead discount or homestead exemption is for that primary home owner. It's based on whose names are on title, and we have to apply for that benefit. Actually, they don't just automatically give it to us after we purchase our home.
Yeah, no, you've helped me several times with people that I've referred that didn't know, and you actually let them come to your office, and you've done that with
Yes.
them, which is a great benefit, and this is a great benefit of working with Faith too.
Thank you. I try to offer that courtesy because it's not easy. There's a lot of brain power that goes into it, and it can be confusing for, that citizen who doesn't work on the computer anymore,
Sure.
So I don't mind helping out with that. But the homestead exemption is for the primary home owner.
So now I'm going to play devil's advocate here for a second. Say I am one of these people that spend half my year here and half my year up north in New Hampshire. So we're sitting at a house that we're doing a broker's open today that the owner is moving to New Hampshire. Let's say he's going to keep this property. Can he homestead both if he spends half of his time here and half of his time there?
I have to defer to the property
Okay.
appraiser's office for that one. I have not seen that has been allowed here
Okay.
in Volusia County.
Okay, so let's go on to the next question. This is a big one, especially in today's world. How do you help buyers come in to prevent fraud from happening?
Ooh, there's all kinds of layers that check that out.
A lot of paperwork involved too.
Oh yeah. So I've actually had some recently that I had to reject and withdraw from.
Really?
Oh yeah. There's some clever people out there, but fortunately, even the government and the regulators require that we have certain measures in place that detect the different kinds of fraud that exist.
All right, I have a big one here. How do you help clients compete with cash offers?
I have some very unique products that others don't have. I try to be that unicorn. I have a couple of specific products wherein the buyer, my customer, your customer, the buyer needs a mortgage, but we can qualify them and pre-approve them such that the offer they make to purchase a home is a cash offer.
Really?
My programs can eliminate contingency of financing in the contract, even though we're still gonna do a mortgage for them. They
Okay.
need a mortgage.
Are you allowed to talk about those?
I can. So the person would come to me and do everything we do in the mortgage industry starts with an application. An application is really just a series of questions. And then the answers to the questions give me the criteria I need to determine for what they're qualified, what programs, what products, that kind of thing. So we start with that. Then there's documentation that supports the answers to the questions.
Okay.
Right? We go through that process. I will send it to upfront underwriting. So they don't even have to have a property in mind. I send it to upfront underwriting. That comes back to me that they are truly conditionally pre-approved. And then I use that with my program, and they can make an offer on whatever home they find and love, and it can be a cash offer.
Wow, okay. In a time where it's more of a seller's market, right now we're in a buyer's market for sure because there's just so much inventory out there. But
Correct.
in a time where there's a seller's market and it's competition like in 2020, 2021,
It's ideal.
then this scenario would be perfect for somebody willing to come in with a competitive edge, especially on when they're already pre-qualified for that and they're just waiting for the right house to step in front of them.
The key to it is being prepared and cooperating, honestly, where folks feel like they'll get to me and send me documents when they're ready or after they're under contract. And that's where the mistake is. Go ahead and send me all the documents so that I have everything ready and prepared for their offers to be made as cash offers.
Yeah, preparation is big. I know that in the military they say proper planning and prior preparation prevent piss poor performance.
That's exactly
right. It took
right.
a long time for me to learn that phrase.
P's.
Get all those P's right, yeah. So let's talk about prep then, because we have people that come down here. I just had a couple that came down here, a multi-generational family that came down here, and they're like, Matt, they're from Salt Lake City, great family. They came down, they're like, Matt, we're here for a discovery trip because we don't plan on moving in 4 to 6 months. But they come down and they find exactly what they love, and they haven't prepared for it. Now, we were able to on the second day, we were able to get under contract for the price that felt comfortable for everybody, but their 6 months turned into less than 6 days to get under contract. So what are some things people can do to help prepare themselves for the time of purchase?
We need income to be able to make a house payment. So know how much your income is. I get to talk to a lot of people frequently, especially folks who are, I love that discovery trip, who might be here on a discovery trip. Well, they're looking at the land. They're not thinking about financing. So then when they do talk to me, they have no idea how much money they make. I would like to have that problem.
I would like to have that problem too. That sounds like a great problem to have.
Doesn't it? But they don't know. And so honestly, that's know how much money you make.
So Faith, tell me, what would you say to somebody that first off didn't think they could get a home, or maybe a first-time home buyer, or somebody that was thinking about being a first-time home buyer and just doubting if they could actually get in or not?
What would I say? I would say don't give up. Might not be approvable in the beginning, but we can always create a plan. And I have a great story that's recent for me that kind of speaks to that.
Please,
actually.
Love stories.
A year ago, I was at the grocery store. There was a lady in front of me, and she was short paying for her groceries. And the cashier looked at me and shook head, rolled eyes, and I went like that. And I had a little cash, so I gave it to her and took care of the lady's whatever was due. And so she waited for me to check out my groceries and wanted to say thank you. And she was so nice. And she saw my name tag. She said, I've always wanted to buy a home, but I'll never be a homeowner. That's a dream that I'll never be able to achieve. And I said, well, don't say that. That's not true. Why do you say that? And she said she lived in the projects and that she was being evicted. So I asked her why. And she said that she had received the cost of living increase from Social Security. Mm-hmm. And that little bit of increase caused her to make more than is allowed across the threshold than what's allowed for affordable housing. And they evicted her because technically that point she made too much money to live there. Although Social Security, let's face it, that's not a lot of money.
Yeah.
So I said, well, there's programs for that. And she told me she had already talked to a social worker and that she was told she was not eligible for any programs, which I have a hard time believing that. There's programs for everybody. You just got to find them and look for them. And so I told her, I said, come to my office, talk to me tomorrow. I'll see if I can help you. I don't do affordable housing placement type thing. I do mortgages, but if someone needs help, I'm going to do the best I can to help them. So she came, talked to me, interviewed her. I asked her a lot of very personal questions. She did tell me that her husband had passed away. I asked, had he served in the military? And she said yes. And it turned out they got married when she was like 16 or 17 years old. And then he was drafted to Vietnam.
Oh, wow.
So they were married when he served combat duty. So I called my friend at the Veterans Administration and I told him what happened. And he said, send her to me. And so got them connected. It took a whole year for everything to get hashed out and fleshed out through the VA. But she now receives a supplement. She was eligible for surviving spouse benefit. And so now she receives supplemental income from VA and additional VA benefits in addition to her Social Security. She called me and we kept in touch through the whole year. But she called me one day. She said, do I qualify to buy a house? I said, yes, ma'am, you do. And so 2 weeks ago, we closed on her
Oh my gosh, what an amazing story.
It's one of my favorites.
Oh, well, obviously, and what great involvement that you had, and that she had too, like that after the fact that you set her up with the VA and everything like that she would come back to you and have, it's hard for people to ask for help. It's hard for people when their listings are on the market for a long time, they get embarrassed, and they won't talk about that, but they get embarrassed when people are wondering if their debt to income is going to make sense. Do they have too much debt, or is their credit score not good enough? And to be able to have that faith, and then to be able to have that faith to come back, funny, that's your name too, to come back and actually inquire, is it time? And so what a great story. So again, it's important for me to share these relationships that I have with, local people that are reputable, not just resources, but reputable resources. People that, nobody's going to say anything bad about you in town. Nobody hopefully is going to say anything bad about me in town either, unless I beat them out in a negotiation, and then maybe they might be upset about it. But
that's jealousy.
That's just working for you guys. So, but having, reputable resources that are willing to go out there and help. And so I wanted my audience that watches me and subscribes to me to be able to have an opportunity to see Faith and know that you might have lenders out there that you work with, but I'm going to tell you, nobody knows the market in the area that we work in and that I work in better than Faith. And I don't have any more faith in anybody than Faith sitting right next to me at HMA Mortgage. So listen, we get phone calls, emails, text messages, Zoom invites every day from people just like you wanting to move to the beach. So whether that be in 2 days, 20 days, or 200 days, please don't hesitate to reach out. I would love to help you move to the beach. Faith would love to help you move to the beach, and we'll see you next time. Thanks so much.
Okay.